Hi everyone, welcome to the latest mortgage podcast. Today I'm pleased to have with me Paul Kane, Corporate Account Manager for Mpowered Mortgages. Can you tell us who Mpowered Mortgages are and what they bring to the mortgage market?
Yeah, thanks, Anita, and great to be with you and your members today. So Mpowered was set up just over 4 years ago. The holding company is called M-Cube, and in reality, what you'll see in the marketplace is mortgages under the Mpowered Mortgages brand. That's going to be our branding in terms of our funding. But we are a fintech startup that's entered into the mortgage market, and to really sort of crystallize it in its simplest form, our ambition is to radically change and, where possible, digitize the mortgage journey for brokers and for customers. I've been in the market now for 30 years, and when you reflect on the mortgage process, even in 2022, it hasn't really fundamentally changed and has still been quite a clunky process and quite a stressful process. Stressful not just for brokers, but also for customers. So the advantage we have as a new startup is we have a blank piece of paper to build a business. And what we've done is we tried to build a business that takes multiple data feeds, utilizes artificial intelligence and machine learning. And we built a platform that has the potential to be able to produce mortgage offers as soon as the advisor has finished keying the application. And the reason we can do this is we've effectively codified our lending policy into a set of rules so that when the customer's keying in data, such as a customer name or property address, we're firing that data off to relevant sources to verify and also to get data returns. So we're actually underwriting the case in real time. Now, not all of our automation is yet live, but what our ambition is, it's probably into 2023, would be to be able to offer binding mortgage offers at point of sale for a significant number of cases. Just like to reference, we're not treading a path that's completely new here. Our reference point is Rocket Mortgages in America. They've become the largest mortgage lender in the States, and they do a significant amount of their mortgage business where they generate binding point of offer offers at the completion of an application. So it's not like it's completely revolutionary. We're just taking a lead from what we see in the States. So in essence, what we aim to bring to the mortgage market is more certainty of decisioning to the front of the journey rather than some weeks later when the customer gets their offer.
Thanks for that, Paul. I think we can say anything about the pandemic, the positive side to it. It has brought the mortgage market into the 21st century with regard to technology. So following on from that, Paul, can you tell us more about how you focus on the customer experience?
Yeah, I think for customer experience, it'd be end customer, but probably for us, it's advisor and broker, because our system has been built around advisors. So we want to make the advisor experience better, and hopefully their end customers experience better too. So to give you some typical examples, we only ask questions on our mortgage application that we can't source elsewhere. So we've been live for 8 weeks in residential mortgages, and the average time it's taking for an advisor to key a full mortgage application with us is just over 7 minutes. And once the full mortgage application is keyed, a part of that is the advisor would enter the customer's email address, and that sets up a link for that customer into our portal. So once the case is offered, the customer can electronically go into the portal, accept the offer via that portal, and there's no physical paperwork required from the customer back to us. Some of the neat features of experiences when advisors register with us and have access to the portal, that's where they can submit their applications, but it's also the same place where they upload their documents, and it's also in real time how they would communicate directly to our underwriters. So if we've got an issue on a case where we want some more information or a question, we will effectively put the question in the portal. The advisor gets an email saying there's a question in the portal, and then when the advisor logs in, he can either answer it there and then directly back to the underwriter, or if it's a document upload the additional documents as is required. So there's no need to call for a call center with us. So you won't be hanging on a phone trying to get an update on your case or understand where it is. That the portal will not only give you all of that access in a one-stop shop effectively, but you'll also get a timeline of exactly what's happened on the case. So hopefully the processes we're building will make it slicker for advisors and increase their efficiency and productivity. And I guess behind all of that, when you think about consumers in this increasingly digital world, what they expect to get is their product or their service really, really quickly and on demand. So again, it links in with our ambition to try and get mortgage offers out at point of sale. Customers, it's a very stressful period for them especially when they're buying their first property. And a lot of that nervousness and stress is caused around, have I got the mortgage secured? So if we can get that security to them up front as quickly as possible, I think that alleviates a lot of the pressure on customers and also advisors.
Great. Thanks for that, Paul. Turning to sort of like your competition out there in the buy-to-let marketplace, you've obviously covered a few of your USPs there. So are there any other points that advisors should be aware of, why they should choose yourself over other lenders in this space?
I think in buy to let, it's really quite a crowded market. So, I've joined Mpowered from a residential lender. So when I looked at the criteria that Mpowered have, I thought actually they should be, it's quite innovative. But I soon realised actually in the specialist market, there's a lot of lenders covering quite a wide spectrum of criteria. So criteria doesn't seem to be the sort of the proving point between choosing one lender or the other. In reality, my initial impressions anyway is that the buy-to-let market can be as price competitive as the prime residential. So I think for us it would probably in buy-to-let, and we're probably, due to our pricing in buy-to-let, we're in the more complex end of buy-to-let. I think it's about speed of service. So, typically we're looking to, once an application is submitted, to give an initial underwrite over the phone back to the advisor within 4 hours. And then once we've got all the supporting documentation in, we're looking to offer cases within 36 hours. So I think probably our differentiator in buy-to-let is probably not going to be around many USPs of criteria. It'll be pricing when we're at the top of the tree, but also the speed of service that we can offer.
Yeah, I think it's interesting, going back on the point you raised there, it is a crowded market for buy-to-let lenders at the moment. From a personal point of view, and I don't know if you've got a view on it, there's too many lenders there at the moment, and possibly that could shrink over time, would you say?
I don't know, because when you look at what's happening in the market, there just seems to be more and more new entrants. But anecdotally, I would be with you, Anita, in that it seems to be a lot of lenders chasing not an infinite amount of business. I mean, the good news for buy to let is it's still a strong and vibrant market. I think what is happening in buy to let is, if you look back sort of 5, 6, 7 years ago, there's been an awful lot of innovation. So I remember when buy to let was quite a simple product, but now we've got homes in multiple occupancy, multiple unit blocks. You've got lenders looking for those sort of different opportunities, the rise of bridging, etc. So I think the fact that it is a relatively crowded market is helping for those lenders to try and find additional solutions for customers. So I think buy to let is a mature market that I think will still grow, but like you, I think it's a lot of hard work to get your volume out of that market at the moment, just because of the amount of competition. But just one thing I'd say on the residential, which I know we're in limited distribution at the moment, but we've got a different strategy with residential, in the sense that for that segment of the market, we're looking to compete on price with the top 6 UK lenders. So it's a different offering from us, in that it'll be price driven along with those service elements. So in residential, we won't be looking for customers with maybe slightly different criteria to how we'll be looking for the mass market and the vanilla customer.
I see you've recently announced that you've onboarded some large new investors on entering the prime residential market. Can you give us any more background on that, Paul?
Yeah, you're absolutely right. We put a press release out a few weeks ago. I guess if I take a step back, the initial funding that we had when we started up as a fintech was from some typical fintech investors, one of which is Jamjar, which these are the guys that brought Deliveroo and Innocent Smoothies into the market. So very much bringing consumer brands into the market. We then went into the buy-to-let market, and just before we entered the residential side, we had some significant investment from three I call blue chip financial companies. So we've got investment from Barclays, we've got investment from M&G, and also Citibank. So they've invested into the business. So that's given us a great platform for us to effectively accelerate into the residential market and start to build our brand in that sector.
That leads me on, I suppose, to the next question, Paul.
Yep.
What's next for you? What's your priorities going to be for the remainder of 2022 and beyond?
We're 8 weeks into our phase one of our residential mortgage rollout. So I think our focus for probably the rest of this year is primarily on building up some residential volume. I talk about phases. That the first phase we're looking to effectively prove a concept with our current residential funder. So we are on limited distribution at the moment. Only one network in the UK has access to us, and just to confirm with Right Mortgage, you guys have access to buy to let, but we're not currently trading with you on residential. But to sort of give you a sense of where that's going, phase one will probably take another couple of months. You know, we're at 75% LTV, simple range of products. But once we've got through that first phase of effectively proving that the tech is working fine and our funders really relax with our processes, then into phase 2 and 3 would see us move up the risk curve. You know, probably phase 2 into 80-85%, and we'd like to be with a fair wind towards the end of the year up at the higher end of the LTVs, the 90s and the 95s. And along with that, you know, will be how do we increase our distribution and invite more networks to have access to our products, and also how we scale up our own business internally in terms of more BDMs, more support staff, etc. So very much a growth phase, but I take you back to the point where we're competing on price with the top six. Now, the top six do 75% of all the residential lending in the UK. So we've got to be quite considered and measured about each step we take, because what we don't want to do is to be snowed under with volume that we can't cope. So it's a bit of a balancing act, but that will be our priority for the rest of the year, and probably into 2023 would be to grow our presence in the residential market.
Great. I suppose one of the questions that comes out of that, what our members would be asking, can you give any indication when the Right Mortgage would have access to the residential product, or is it just a wait and see scenario on that?
You know, it's a great question, and it is a wait and see, and I think it's mainly because we've got a few things to balance, because the initial phase is primarily designed to do a few hundred completions, so it's not big scale. Going to phase 2 and 3, yes, there'll be times when we will want to ramp up our distribution, and so we'll want to grow the amount we lend with the amount of growth that we do internally in terms of our sales structure as well. So I think we've already had a couple of conversations about how the pilot's going in each, and we'd certainly want to involve all of our key partners as soon as we can. As we grow, we'd like you to help us grow, but it is that balancing act between doing more volume and having the capacity to serve it. I think we've seen examples in the past in the mortgage market where maybe a lender's come in and taken too much business, and reputation suffered. What we'd like to do is to be known for really good systems, good service, great price in residential. So it is a balancing act, but trust me, as soon as we're ready to take our next step, I'll be on the call, on the phone to you.
Great, thanks, Paul. So if brokers want to register on your platform or like a demo of the system, how best can they get hold of you?
Okay, we've got our website, which is mpowered.com. So if you were to go on there, you can an advisor can register. Obviously, for guys in the Right Mortgage network, post registration, that will give you access to our buy to let products. In terms of a demo, if any groups or if any team meetings or large firms would like to have a demo of the system, we can certainly do that. We've got 6 key account managers around the UK, so we can put you in touch with those guys who can walk you through the buy to let proposition, how the system works, etc., etc. So And we've also got another 4 or 5 telephone BDMs as well that can also help. So we've got some good infrastructure there. So if the firms could reach out via yourself, Anita, we can make that happen.
What we do, we put all the contact details on our website, but if there are any members that want further details, by all means give me a call or drop me an email and I'll pass them on to Paul. So finally, Paul, and I think this is a $6 million question, how do you see the market panning out this year? I see that the Bank of England has recently reported net residential mortgage borrowing decreased to 4.1 billion in April, down 36% from 6.4 billion in March. Do you see an increase in buy-to-let business? And the resi market, do you see this plateauing?
I think, the first thing I'd say, just if we take the residential market to start off with, last year was the largest ever gross lending figure that we've experienced, and it even beat the heights of 2007. We went north of 300 billion in lending in the market in a backdrop of of COVID times as well. So when we're looking at statistics, actually we're coming off a real peak, an all-time high. So we would expect, and I think the UK Finance estimate of the market was that we'd probably maybe be 18 to 20 billion light of where we were in 2021. But even that would be, I think, the second largest total of all time. So the market is very vibrant. That obviously some issues that have happened, not just in the wider economy, but Ukraine and swap rates moving and jumping up left, right, and centre. So I think there's some headwinds in terms of how lenders price, etc. But it seems to me that consumer demand in purchase might be slightly waning a little bit, but it's still incredibly strong. Certainly where I live, we've still got a lack of stock, and whenever a property comes on the market, seems to be snapped up within the week. So I think there's still consumer demand there. I think the remortgage market is a real opportunity for all of us, lenders and brokers, this year, because there's close to 300 billion of cessations in the market this year. So how that translates into product transfers and or remortgages, I think, will be a key battleground for both advisor and lender. So I think the market may not hit the heights of 2021, but it will still be a great year. For buy to let, I said earlier, I think it's a really mature market. There is still some innovation as lenders are improving their credit criteria to help more customers access, probably in the portfolio space than in the amateur landlord space. But I see the buy to let market overall, which I think is around about 50 billion in size. I don't see it shrinking in 2022. We started to see the rise of additional lending, such as holiday lets, etc. So I think that market will continue to innovate and improve and remain. So I think it's one of the few sectors of the economy that has actually thrived and really grown in the last couple of years. So I'm quite confident that we will still have a really good market, both from a lender point of view and advisor point of view, in 2022. And I think 2023, again, if I go back to the UK Finance estimates, they were expecting a tick up into 2023. So I think the only thing I think we've got to watch is the cost of living crisis and affordability. That's undoubtedly going to sort of come through on ONS data in particular. So affordability might be the one issue that we would all need to keep our mind on as we go through the rest of this year.
Yeah, I'd agree with you on that, Paul. I agree with you. I think the market isn't going to collapse. I think it's going to sort of like maybe just plateau off slightly. But as you say, with the product transfer market towards the end of the year, with all the maturities coming out, it's still a good market for advisors.
I think it is absolutely right. I'd agree with you.
Right. Well, thanks for your overview, Paul. I hope from the advisor's point of view, that's given you a good insight to Mpowered Mortgages. What we'll do, we'll put the podcast on the advisor website along with contact details. And as I said previously, if you want to speak to Paul directly, please drop me an email and happy to put you in contact with him. That's it from me. Thanks for listening and watch out for my next podcast.